People say my house payment is my house payment, right? But it's not. The only thing that's fixed in your house payment is the amount of money you're paying to the lender. That means principal and interest. Those are the only two things that are fixed in your monthly payment. Your insurance and your property taxes most likely will go up every single year.
Patty, it's V.
And I'm Mark, and we're the Real Estate Dream Team.
Oh my gosh, Mark, why the heck should they listen to yet another real estate podcast? Well, I will share my why, and that is we'd love to tell you how to get those keys the smart way.
And help you crank those gears that turn your dreams into homes.
There you go. Let's roll, baby.
Let's roll, baby.
Today's topic, what don't you know when you're buying a house? What do people wish they had known before buying a house? Bess?
Right.
So we're going to show you the gears that give you the keys at the end to buy your house. And that's what we're here for. So let's dive right in, Bess.
Let's
talk about some of the hidden costs. What about on the real estate side?
On the real estate side, it would be not being very sure that those systems in that used house, that previously owned house that you are buying, that they are in the best possible condition that they could be. Are we looking for perfectly new? Well, that would be great.
No,
but
not going to happen.
Not very practical most times.
Unless you buy new construction.
Fair enough.
Right.
Fair enough. Even then, it could be interesting.
Right.
But but that's probably a hidden cost that, yes, people go into an inspection. That leads to the next one, which is people forget that inspectors don't work for free.
Right.
It's critical to find out about those systems that might be a big hidden cost with a preliminary hidden cost when it comes to closing on your new home. And that is paying for an inspection.
Right. That's step number one.
There
is
you go.
pay for the inspection, even on new construction.
Yeah.
Which runs from $500 to $1,000?
Yes. Holy cow, Bess and Mark. Why such a big, broad range? Well, because each house, just like each of us, is very unique. It has different needs of investigating.
Yeah.
And for example, if a home is built before 1980, I'd say it is an absolute must that you spend about $350 on top of a standard whole house inspection.
Right.
About $350 on a plumbing inspection. And at $350, what the heck were we covering? We're covering a video. We're expecting to have a video inspection.
Where they send a camera into the plumbing to see what's going on.
Right. To actually get to see roots in the pipes. I've seen Easter egg pieces in pipes. I've seen Legos in pipes.
Right. They also have leak detection systems that they can employ throughout the house.
Separate fee.
That's a separate fee.
We're dialing up to 1,000.
So it starts adding up pretty quickly. The inspection fees and the extra inspection fees on top of that, not to mention maybe an electrician that has to come out. So before you go into this process of buying a house, you got to set aside some money for inspections.
Right. So you've got, everyone talks about, and it's fun to talk about, down payment. Right.
Closing costs.
And then separate from that is closing costs. Right. And then separate from that is wouldn't you agree to call it that?
Yeah.
Pre-closing costs, which
Yes.
would be the various inspections. And that is, we can't give you a finite number on that. It is very much based on the
Square
house.
footage, the complexity of the house. Right.
And the relationships that your agent has.
Right.
Because I've got some great people that will come out and check at no charge. And then sometimes, if they're not available or whatever, then we've got to go with, and then it's $150 house call, so to speak.
Trip charge
or whatever else. Right. So
nobody works for free.
That's right. Yeah. So that's a surprise. Tag you're it on finance.
So on the finance side, let's talk about the biggest one I see where people get surprised by. You all know about down payments. Everybody's aware that there's, down payment programs out there to help you with the down payment. There's the 3% down conventional. There's 3.5% FHA. There's 0% down on VA loans. So those are the down payments. Most of you probably already know that. When it comes to closing costs, that's where people get surprised. All the third party fees,
Mm-hmm.
And these are typically not lender fees, although the lender can charge origination fees. They can charge underwriting fees. Maybe you're buying down your interest rate. That's called a discount fee. Those are lender fees. They're not super surprising because most lenders have them. But what you're probably surprised by are the title company fees. The survey fee is a surprise to many people because they don't even know what a survey is. The appraisal fee can be surprising sometimes. If it's a bigger property, it could be another $800, $1,000 for an appraisal.
Mm-hmm.
You have to order a rush appraisal because the closing date is so close to, from contract to close is a very short time period. We may have to order a rush appraisal. That can cost a lot of money. And we recently had one where it was $1,300 for a rush appraisal, which was ridiculous. And we fought the lender on that. But the biggest one I see, though, the biggest amount of your closing costs that's a surprise to most people is the escrow account, what's called prepaids and escrow. Your escrow account is established by every lender.
By law?
By the guidelines. Now, you can waive your escrow account. I wouldn't recommend that. That's a topic for another time, waiving your escrow, not having an escrow account. But let me explain what an escrow account does. An escrow account sets aside money out of your monthly payment so the lender can pay on your behalf, can pay the property taxes once a year and the insurance once a year, the property insurance, the homeowner's insurance. Those two components are part of your monthly house payment. So the escrow account is established at the closing date. The seller puts in money into your escrow account based on the number of months they've owned the property because they owe you the property taxes for as many months as they owned it.
From January 1 of the year you buy
Right.
it until
the
day
closing
you
date.
write them a check.
That's right. So that's a huge amount of money that already goes into your escrow account to pre-fund the escrow account because at the end of the year, the lender will have to pay your property taxes.
Because taxes are paid backwards.
Right. Taxes
to
taxes
clarify.
are
Arrears is the fancy
so
word.
at the end of 2026, you're paying for 2026. Okay. And
27, January 27.
Right.
You're paying.
Most lenders pay in December of 26
Fair enough.
for all of 26, right? So
although it's not considered late until February 1st.
No, right. I mean,
just if you pay it yourself.
It just depends on the lender's servicing department sometimes.
Fair enough.
But having said that, you also will put an extra amount of property taxes in there, even though you haven't incurred them. And the lender does that because they want to make sure that your escrow account always has enough money in it to cover the costs. And for example, what happens if you bought a house and the second month into owning that house, you stop making payments? Then the lender has some extra money in there that they can use to pay the property taxes, for example. The math is pretty simple. It's usually 2 to 4 months added to your close month. So if it's, for example, August is your close date, you can have, 2 to 4 months extra in there. So meaning the seller gives you 8 months and then you also put in 2 to 4 months extra into that account. So that can add up quite a bit to your closing costs. That can add a lot. Your insurance policy, your homeowner's insurance policy is paid forward, not like taxes that are paid backwards. You're paying from the closing date 1 year in advance at closing. So the insurance company wants to be paid immediately for the coming year to cover your house.
12 months.
Right. All 12 months. So that can add up to thousands of dollars right there. And that's where people get surprised. Not only that, but then you also have to put 2 to 4 months of that amount into your escrow account. So you can see how that can.
And when you say that amount, let's clarify what the word that is covering,
right?
Which is, so the key on that you just shared was you pay 12 months, a full 1 year insurance premium
forward,
immediately, basically. And then on top of that, you pay another 3 months worth or so.
Right.
And that extra 3 months goes into the escrow
account. So it sits there until the policy comes due again. In the meantime, you're making extra payments into that escrow account with every month that you own the property. So technically, by the end of the first year, you're going to have more than enough money in your escrow account. Now, here's the second part of where people get surprised. A year into owning the house, you may get notified by the lender saying that we've looked at your escrow account and we think you're going to be short. You're not going to have enough money in it.
Oh,
to
wait,
pay.
Mark, how does that happen
So
with all this planning?
there is, for me, it's a little bit misleading or kind of funny, but people say my house payment is my house payment, right? But it's not. The only thing that's fixed in your house payment is the amount of money you're paying to the lender. That means principal and interest. Those are the only two things that are fixed in your monthly payment. Your insurance and your property taxes most likely will go up every single year. So fast forward a year, the lender looks backwards and says, well, we got a new tax certificate in showing us how much taxes have gone up. Your insurance company, the renewal is 25% higher than it was last year. Now what? Now your escrow account is short. This has less money in it than what's needed. And the lender then has to give you options. Do you add that money gradually over every payment goes up by so much? Do you want to put in a lump sum? There's different options that you're going to have, but you're going to owe that money. There's no way around it. So the hidden cost is people aren't prepared for those increases every year. And that's where people like us come in. When you use or have counselors like us, we teach you that, we guide you on that, making sure that you don't forget over the year to put maybe a little bit extra into the escrow account or put it aside and say, that's for anytime I have a shortage in the escrow account.
And that's part of smart ownership too, as far as figuring, not only understanding those costs, but going ahead and putting into your calendar.
Yes.
Whatever form of calendar you
Right.
use, a reminder that maybe every 6 months you call up your favorite insurance dude or dudette and do an insurance audit.
Yeah.
Because that insurance policy, that rider that was written on your behalf, on your new home's behalf, exciting, by the insurance company is not stagnant. You're not locked in on that forever and ever. Amen. It can flex. Like you buy a new car, you probably want to flex. Most people have their auto and home, right? Bundled.
Right.
And so, you buy a new car, you call to update the insurance. Maybe while you're doing that, go ahead and update and review your homeowner's insurance. A very good example that we're seeing more and more in Texas is we have a hailstorm or something like that.
Yes.
And you have a new roof put on, and you are a smart buyer, a smart homeowner, because you either talk to your insurance or you talk to your lender or you talk to your real estate professional to ask the very key question, is there any way to get, my insurance is about to go up because I just made a claim.
Right.
Is there any way to mitigate it? Yes, there is. We are happy to share with you. Talking about hidden costs. Often a 30-year roof, composition roof, is what roofers automatically especially storm chaser roofers just automatically
sell you.
But if you spend surprisingly little money, really, in the grand scheme of things, to get an IR, an impact resistant roof, your insurance rate actually won't escalate after the claim to the degree you might think or assume. So there's two things wrapped in that little key thought, which is every time you make a claim on your insurance, expect the premium to go up. It's not stagnant, as Mark was saying. But yes, you do have the right to mitigate it and or change that at any time as well by being smart and informed and asking questions and being curious about, well, how can we make this better?
And on the insurance, I think it's a good policy once a year. Hopefully you used an insurance broker who's not married to one company, that you review that policy, make sure that you're still covered adequately, but also that you have shopped around. That insurance broker can shop around, So my phone call to my insurance broker once a year is shop all my coverage. Let's talk about what I have covered, how much I have it covered for. Is that still okay? In recent times, building costs have gone way up. So the replacement value of your house has to go way up because it's going to cost you a lot more to rebuild
Is
a
it
house.
still adequate?
And so that amount fluctuates, and most people have it the same for I don't know how long, and then the house burns down. Then they're surprised that they only got $200,000 to rebuild the house, but the cost today is $500,000 to rebuild that same house. So you're $300,000 short. And I've seen people be in that predicament because they haven't checked or haven't looked at their policy, and they say, well, the insurance company should have told me. No, that's on you. So be a smart homeowner. Once a year, get with your insurance broker and talk these things through. It really, and if you don't have an insurance broker that is willing to talk you through those things, please DM us, send us an email. Be happy to connect you with people that will do that for you. So
there you go.
Little hack.
We went on a few tangents. We didn't expect it to go this way.
Yes.
And once again, that's what we do to y'all.
Those are the main
Tell
hidden
you
costs.
what you expect.
Those are the main hidden costs that people don't typically talk about.
Right.
Because they're not very sexy.
Right. Right. Well, how do you turn that into a really cool HGTV episode? Hey, before you spend money on a down payment and closing costs, you're spending money on these things.
Yes.
On these things. There you go.
Yep.
All right. Well,
that's it for now.
That's it for now.
We are wrapping up episode number. I don't know how many episodes we've done.
Yeah, we should probably count and figure that out. But it's been probably over a year and a half that y'all have been hanging out with us. And if you just found us, thank you. It always helps us to find more amazing people like you if you like and subscribe. And please, all you folks out there, comment and share with us things you'd like for us to talk about.
Yes.
Maybe a new coffee place you just found.
Yeah.
Always helps that.
Yes.
I mean, right? All the things. All of you other podcasters out there, we're all listening to podcasts all the time and learning and growing. And we appreciate you coming and joining us and being curious to figure out how to go from today to keys and the gears to get you there.
That's right.
Take care.